Today, I wanted to share with you our agenda. We're going to talk about what is in a credit report, how FICO is calculated, and I'll explain to you what that is, how to repair credit, what is debt to income ratio, report review checklist, and a dispute checklist. And I also want you to know that you will be receiving some handouts that I'll go over at the end of the presentation that are just going to help you with some different tips and ideas when it comes to your credit. Okay, next slide. All right, so we're going to start by talking about credit reports today. Next slide, please. All right, so to start out, there are 3 different credit bureaus. If you're not aware of them, there's Equifax, Experian, and TransUnion. And it's really important that you become familiar with all 3 because not all lenders or creditors report to all 3 bureaus. So it is important that if you are not currently working on applying for any new credit or working towards something, that you check your reports at least once a year. Our lenders contract with the bureaus and they give information on our credit. They show past and current information. They show information when it comes to your credit limits, the balances that you have. They show things like your payment history, which is huge. When your accounts were opened, if they were closed, and different things like disputes. So it's really important that you verify that the information is correct, accurate, and that it belongs to you. This is to help protect yourself. And I'll explain with some different situations. And one that came across with one of my clients is they had pulled their credit and reviewed it and saw that there was somebody on their report stating that they had owned a home in Florida and they had never lived in Florida. And they came to me and said, it's not my home, but it's actually helping my credit score. They're paying their mortgage on time. It's being reported. And I don't know if I should have it removed or not. And I said, well, although it's helping your score, it's also going to hinder you from getting any credit in the future. And so if something does not belong to you, it's very important that you have it removed, whether they're doing good payments or not, because this can affect what you want to do in your future. So no matter what, if something does not belong to you, it's important to have it removed. That is one of the main reasons it's important to check your credit report, not just to make sure what your score is, but to make sure that everything on there is accurate and belongs to you. Next slide, please. So a poll question that we're going to pose to you, and you can answer this on your phone or computer. When is the last time that you checked your credit report? Was it a year ago, 6 months, 3 months, or have you never checked it? So if you can go ahead and just answer that question. And this is not about you being judged. We're not going to, pull out who answered what question, but it's a good idea to know how many of you have done this, because it's something that's important that I can help you with. So go ahead and just answer that question and click submit. I'll just give you a couple more seconds. All right. So here are responses. 45% of you said about a year ago, 9% said 6 months ago, 45% 3 months, and none of you for never. So that's really great. This is really good and shows that you guys are paying attention to what's on your reports. And I can help you understand them if you didn't have somebody explain it to you. So really good job, guys. Next slide, please. There can be credit report errors, as I stated. So a couple different ways that you can check your credit. One, you can go to annualcreditreport.com, where you can have access to Experian, TransUnion, and Equifax credit reports. Now, they're not going to give you your credit score unless you pay a small fee, but it's not about getting that score right now. What it's about is making sure that everything on there belongs to you and that they're reporting correctly. So the really cool thing with annualcreditreport.com is that you can pull all 3 reports at one time. Or you can do one every 4 months and then kind of keep on top of it throughout the year. So it's up to you how you want to do it, but it's a really good, safe way for you to get that credit pulled. If you do it online, they are going to ask some security questions. So it's also important to know that if you answer any question incorrectly, that they'll end up having to have you do it on paper. So no, they ask some questions from your history. So I've done it before and I forgot some of the answers. And then I ended up having to do it on paper, and that's perfectly fine. Um, it's just nice to do. It's nice to have a copy for your records. As I stated, at least once a year, if you're trying to work on getting credit for something, then you want to do it a little more often, maybe 6 months or every 3 months. And because you can do it only once a year, you can also come to somewhere like La Casa where we do free credit checks. We contract with just TransUnion, but it's a good way to also check your credit report. So, and we can give you a credit score as well as any other creditor. Next slide, please. So credit score ranges. What I'll tell you is FICO score is used most in the Midwest, and so it's good to use a FICO score. What's important to know is there are hundreds of different credit scores. So you can come to me and I'll pull your credit and I'll give you a score, right? Let's say your score is 680. And that same day, you go to a creditor or a lender and you apply for credit and they pull your credit and they have a different score. I've seen differences from 20 points up to 150 points. The most important thing to know when it comes to your credit score is that whatever creditor you're using, the score they pull is what's accurate. So there's no room to fight about it. Just understand it's different. They use different types of models and pulling your scores, and whatever they pull is going to be accurate. When working on building credit or understanding what's on there, once again, it's just making sure everything is accurate. Scores can range for FICO anywhere between 300 to 850. The really great thing is if you work with us, I can help you understand where you are and how to improve that score. So a lot of different ranges. It's just making sure that you're doing what you need to do, and I'll explain that. Next slide, please. All right, so let's talk a little bit more about FICO scores. Next. So, what makes up your score? It's so important that you know this. And this is going to be in one of your handouts. Okay. 35% of your credit score is your payment history. Once again, this is reported on your credit report and it can stay on there for 7 to 10 years. So making those payments on time is so important. And you're going to learn about this a little bit when we get into our budgeting, which I hope you're all signed up for. But making those payments on time is going to be the most important thing. So when I work with somebody and they want to improve their credit, the first thing we do is we work on your payment history and we make sure that all of your bills are paid on time. And I can show you what bills are reported on your personal credit report so that you can understand and make sure that you're making your payments. 30% of your credit score is the amounts owed. So it's your credit limits versus the balances that you have. So it's really important to know that it's also a rule of thumb to stay 30% or less of usage. And so people think, well, why? They gave me this large credit limit, why not use it? Well, the creditor doesn't care. They want you to use it all, right? Because they make money off of that. But when it comes to your score, it's important for you to keep track of that and use it to your benefit. And I can teach you some of those things. 10% is new credit. So any type of credit pulls or inquiries, somebody who pulls your credit can affect your score. Now, annualcreditreport.com does not affect it because you could do it free once a year. And then somewhere like La Casa, where we do the free credit pulls, because we do financial coaching, it also doesn't affect your credit score. But if you're going to apply for credit, for a credit card, an auto loan, a home loan, things like that, then yes, that is going to affect your score. So it's important that you understand and really analyze if you want to have that credit pulled before you do it. 15% of your score is length of credit history. So it's really important that you have a lengthy history. So we always try to teach people at a young age, maybe 18 years old, that it's time to establish your credit so that as you grow, your credit grows with you. So one rule of thumb, when people like to pay down credit cards and things like that, it's important that you don't close those accounts, because when you close them, it will cut off that history. So always important that you, if you're working with somebody, that we talk about that and tell you how it's going to affect you. And then lastly, 10% is the credit mix. So lenders like to see a variety of credit. They want to know that you can manage credit cards, that you can manage personal loans or auto loans or home loans. So just having that mixture helps with your credit score. All of this makes up what your score is. So you see all the different parts and know what are the most important: payment history and amounts owed. Next slide, please. Okay, so what doesn't have an impact on your score? And this is important to know: race, religion, color, sex, marital status, your age, your occupation, your employer, things like that. None of those have an impact on your score. As I talked about just a moment ago, the inquiries that are made by you, and that means when you're checking your own credit or you're working with somewhere that does a soft pull, those do not affect your credit. So it's okay to do those as long as you know what you're doing in that time. Occupation, things like that, the employers, they're it's not going to affect it. Salary is not going to be on your credit score. It doesn't affect any of that. So just knowing these important facts is really good for you. Next slide, please. So credit repair. So what does that mean? Well, you got to make sure that your report is accurate. And I'm going to repeat it over and over again. Little things like your name or your alias, your addresses, things like that are important to make sure that they're accurate, because if they don't belong to you, it can make such an impact. I've had somebody who, a street name that is the same as somebody else can put somebody else's information on your report. And it's important that you check for that. Never ever pay for credit repair service. It's something that you can actually do on your own, or you can work with someone like La Casa to be able to fix those things. Good budgeting, setting up payment reminders, being able to project cash balances and utilize the net monthly expense worksheet, which is going to be one of your handouts, is really a good way to stay on time with your payments. But when it comes to credit repair, there are different apps that you can use, but not a lot of people are tech savvy. So we have printouts of some dispute letters that you can use and add your information to and send out to correct any errors. So rule of thumb, really, if something needs to be fixed, fix it. Don't leave it with not being attained to. Next slide, please.
Crystal, I do have a question in the chat box. It was actually sent directly to me, but I would like to voice it for everyone to know. The question is from Gina. If someone has filed bankruptcy, can they still improve their score?
Absolutely. Filing bankruptcy, is not the highest suggested thing that we recommend, right? But for some people, they need to do it. And it's not the end all. Okay. So as you file bankruptcy, you can start establishing your credit again. And it does take time. You have to give yourself probably up to about 2 years. But in that 2 years, you're making on-time payments again, and you're moving forward with everything. When it comes to establishing new credit, you're going to see after filing bankruptcy that you start getting offers when it comes to like opening credit cards and things like that. I don't recommend those unless you're working with somebody who's going to help you stay on top of it. But there are different credit building things that I'm going to talk about as we move forward that are going to help you in building your credit and establishing new credit as you move forward. Okay. So here's one of them. So there is something that I've recommended to my clients, and it's called a credit builder loan. It's a really good way to help you build your credit. So sometimes we've already worked on paying off our debts, right? And we've had some accounts that are closed, some are still open, they have zero balances, but our score is still low. It's important to be patient with yourself and understand that it takes time to build that credit score, right? It's very quick to lower your score and it takes time to build it back up. Well, a credit builder loan is a really good example. And this is just an example of what a loan looks like. So there are different amounts like 1,500, 2,000, or even 2,500. And in this, you'll see the percentage rates, the month terms, and what your payment may look like. So what happens is you get approved for the loan and the savings account is opened for you. They do not release the money to you. So if you get a $1,500 loan, they take the $1,500 and it goes into the savings account. And then you make monthly payments for the full term of that loan as if you had received the money. You pay your principal and the interest, and you make it every month on time in full. When your term is up and you've paid everything off, then the money can be released to you. It's open in your savings account, so you can choose to keep that account and keep adding to it, because what have you done? You've created a habit in making those monthly payments now. And so you can keep building on it, or if there's a necessity that you have, the money is free for you to use. It is a wonderful way and tool to build your credit, because what happens is that creditor reports to the credit bureau every month that you have made those payments on time and in full. So now you have established credit again, and you've built your savings. So really, really great ways to help improve that credit. If you want more information on credit builder loans, you can contact me, and I have my contact information below, and I can help you on finding some different credit builder loans that are available to you. Next slide, please.
Great, Crystal. We have another message or question in the chat box. It's about old energy bills. They're wondering if, even though they don't report them anymore, can they still be used to build credit?
So absolutely. So some lenders, when applying for credit, will allow you to show payment history on any bills that are not reported to the credit bureau. So bills like your utility bill, even your cell phone bill, which doesn't report to the credit bureau, if you have the history of on time in full payments, then you can use those as you're applying for credit. Now, is it going to help improve your score? No, it's going to help improve your chances of getting credit with a lender or a creditor. Hope that helps. All right. So what does credit repair do? It lowers your overall debt. And there's a method that I want to show you. And I'm going to tell you, I've used this for myself. It's such a good tool, and you can use it a couple different ways. And it's called the Snowball method. So it uses less than 30% of line of credit. So let's get into the next slide, and I'm going to explain to you what that means. So what you do is, let's say we have 3 different accounts and we owe all of these accounts. So I have my checking account, and then I have my debt A, B, and C. So what do we usually do if we're struggling? We make our minimum payments, right? So next slide, I'm going to show you what you do to help. So we're going to make all of our minimum payments, but on debt A, we're going to add an extra payment. So let's say it's $25 for each payment minimum. I'm going to do 35 to debt A. So I'm going to keep doing all my minimums to B and C, but I'm going to do 35 to debt A until that pays off. And it's going to pay off quicker than B and C. Go to the next slide, please. Then I'm going to take that minimum payment from debt A, the extra payment that I did for debt A, and I'm going to apply it to my minimum payment for debt B. So now I'm doing for debt B, extra payment, minimum from A, and minimum from B. And then for C, I'm going to only do that minimum payment. That's going to pay debt B off a lot quicker than I even did debt A, right? Next slide, please. Now debt A and B are paid off. I'm going to take my minimums from debt A and B and that extra payment and add them to my minimum for debt C. And then you're going to see debt C get paid off even quicker than the rest. It's a really, really great tool. It's a great way. You can pick what that extra minimum payment is. Okay. It could be $5. It could be $25. It could be whatever you can afford in your budget. And that's a really good way to bring down your payments. A lot faster. And some people choose to do the highest amount or balance that you have due first and work on that one. And some people choose to do the highest percentage that you have to pay interest on debt A, B, or C. So that is a personal choice. It's something that you can discuss with your financial advisor or a financial coach, and we will help you in determining what you need to do. But ultimately, it's your decision. And it's just a really great way to work on all of your debts in at ease and be able to, because so many people try to make extra payments to each one, but they feel like they're just going in circles. Because you're trying to make an extra payment to all of them, the amount is a little bit less. And so it's taking you so much longer to pay these off. So if you work one at a time, you're going to see it work a lot faster. Next slide, please. So I'm going to talk a little bit about debt to income ratio. It's a term a lot of you may not be familiar with. If you do coaching with me, I'll teach you even more about it. But it's something that lenders look at or creditors look at when they are trying to approve you for credit. So I'll just talk a little bit about it. Next slide, please. So what it does is it determines how much debt you have compared to how much you make. So basically what we do is we take your gross monthly income, which is your pay before they take taxes out, and we divide it by your monthly debt payments. So that just gives you a percentage, and this helps determine your affordability to receive credit from this lender. And so it's a calculation that we use. So your housing expenses and your gross income, and we do a calculation, and that will determine your standing when it comes to different creditors or lenders. And it's going to be different depending on where you go. It's going to be different depending on what you're applying for. If you're applying for credit, a personal loan, an auto loan, a home loan, it's always going to vary. So it's just important that you understand it, and we can help you do that. Next slide, please. All right, credit report review. Let's go on that. So here is a checklist that is going to show things for the credit report. So social security number, your name, address, phone number. It always lists about the last 3 addresses that you lived at. Let's see. Is it going to show marital status? No. Employment history? Yes. All your personal information, public records. Are accounts up to date? Are your balances current? If they're joint accounts, if you are on someone else's account, it will show up on your credit report. So if you are, let's say you and your spouse have credit cards and there's one main person, the other one just has a credit card on that account, it will show up on your report. So it can be a positive or a negative. Always make sure if you're a joint owner of an account that everything you are paying attention to, because it does affect you. And then duplication of accounts is good to pay attention to, the age of accounts, and then stolen identity. So a lot of things that you need to check on. Next, please.
Crystal, we have some more questions in the chat box.
Please.
Do you pay off accounts or don't close them?
So yes, if you were, so it varies. Let me tell you this. Each person is going to vary. So there are some people who have multiple credit cards or different accounts, loans, things like that. I've seen people who have like 15 to 20 credit cards. So depending on each person we would have to go over your personal information to determine if it's right for you to close an account or not. If you're someone who tends to, have sticky fingers and want to use those credit cards a little bit more often, it may be a good option for you to close an account after it's paid off. But if you paid it off and you're still trying to build your credit, closing an account can lower your credit. So it depends on how many cards you have, where you're at, and what you're trying to work towards. Are you just trying to clean things up? Or are you trying to work towards building credit so that you can apply for a loan or a credit? So rule of thumb is that closing an account can lower your score, it will lower your score, but it's not the end all. You can build it. I would check with somebody if you are working on it to make sure that it's a right option for you. Any other? Okay. So dispute errors on credit report. Let's get into that. Okay, great. So correcting mistakes, this is what I'll tell you. You need to contact the creditor who's in error. It's important. So many times I've worked with people and they may have forgotten about an account that they had in the past that maybe they let go. So the first thing is to contact that creditor, have them validate what this account is. And if it is not yours, then it's time to dispute it. And you do that by contacting the credit report agency. There are forms that you can fill out to dispute, or as I stated before, you can do it online, and you can do it through the mail. It's really important, as I stated, that if something is incorrect or doesn't belong to you, that you have it removed and corrected. There are different time limits as to when they can do this. So if you want to go to the next. I apologize. First, let's talk about the mail. So you can mail it by certified mail. It's the best way to keep track of them receiving the information. So you put your complete name, address, phone number. If there is a confirmation number, you'll put that. Account numbers for that certain account. Identify what is wrong, state the facts, explain why you're disputing, and request a correction. I always include a copy of the credit report. We highlight the information that we are disputing, and we do that for each credit bureau. So there's going to be 3 separate ones, and make sure that it is all on there. And then it's really important to keep a copy of what you're sending, so that you have history and information to report on if there's any issues. Next, please. So an investigation generally takes 30 to 45 days. So you do have to be patient, and they're going to stay on top of it. So they'll do the investigation. It's up to 5 days to send a written notice of decision. And as it states here, if the business reported false information, they must make the correction and notify the credit bureau agencies. So I've worked with a lot of different clients who had errors and disputes, and when something cannot be proven that it is yours, or it's proven that it did not belong to you, then it will be removed off the report within that time frame. So it's a really good way. That's why you want to keep all of that paperwork to make sure that everything's being done. And then usually they'll send you a new credit report showing the removal. Thank you. Identity theft is a really huge thing. It happens to so many people. It happens to so many people right now that don't even know it's happening to them. So that's why it's important to check your credit. And Federal Trade Commission has identitytheft.gov, where you can go on and find out some different ways on what you can do to help yourself. Don't let it go. Sometimes it can be difficult. I'm not going to lie. Sometimes you have to prove that it's not you. Sometimes you have to prove who you are. And it's happened to me in the past. And don't give up. Fight, fight, fight until everything gets fixed, because it's just really important that everything that's being reported for you is accurate. And there are some different ways that you can protect yourself when it comes to identity theft. So if you have questions or concerns, let me know and I can get that information to you. A dispute checklist we talked about, writing a letter to a credit bureau, providing that account number, the explanation, the copies of proof, which would be like that credit report, with the address and telephone number of yourself, and always send it certified so you have that tracking history. Next, please. So in review, most important, understand what is on your credit report. Know that everything on there should belong to you. And I'm talking about your name, your social security number, your address, the last 3 addresses actually, your birth month and year, your employers, all that information is really important. So if anything is incorrect, fix it or come to us and we'll help you fix it. Dispute any errors. We'll help you do that. It's so simple. There are pre-filled forms that all you have to do is go in and enter your information and you can get things fixed. Keep that credit account balance at 30% or lower if you can. That is going to report on your credit positively. Anytime you go above 30%, it's going to start having a negative effect because you're going over 30% of utilization. So if you're already higher than that, then use that snowball effect method and bring those payments down so that you can get in a positive track. Pay down those debts. Remember, payment history, 35% of your score. So if we can get those debts down, pay your stuff on time, it's really going to help you. And when you need help, who do you go to? A financial coach. We do it for free. We're here to help you and make sure that you guys are staying on track. We help people in all different situations. So if we can't find an answer through our resources at Lagasa, we will go out and find who can help you. So always get help if you need it. Next, please. All right, so another poll question. After attending, do you have a better understanding of how credit works? And you'll answer not at all, very little, somewhat, or very much. And there's going to be another one right after. I have a better understanding of how to improve my credit. And once again, not at all, very little, somewhat, or very much. I know it's a lot of very high, broad information, you guys, but we're here to help and we can touch on any topic when it comes to credit.
Yeah.
So
if anyone has any questions too, at this point, I think it'd be a great opportunity for you to potentially unmute your microphone or put that question in the chat box. And then I'm happy to relay that question on to Crystal as well.
yes. And there's no question that's off limits, you guys. I'm here to answer anything. We'll also provide you with my contact information. So if you have a question that's a little bit more personal, you can go ahead and use my contact information and then I can help you privately. But for now, yeah, if you could just answer those polls for us, we would appreciate it. And answer truthfully, because we want to know, did you learn anything from this seminar? Because it really helps me as we move forward and do these for other people.
Crystal, I'm just going to ask my question that I asked you, just the two of us, because maybe it could benefit the rest of the group. But I've personally taken out a loan, and I was curious to know if you pay off the loan quicker, if it affects your credit score, good or bad, or is it best to just pay it off in the full term?
Absolutely. So there's really not a wrong or right answer. So it all depends on what you're trying to do. So if you took out this loan because you want to help build your credit, right, then it would be good to pay for the full term of the loan, because then the lender, the creditor sees that you can maintain that credit history, right, or that credit term. So if you pay on time in full every month for the full term, then it's going to be a positive on your credit report. Now, if you pay it off a little bit sooner, it's not going to hurt you, but it's not going to build your score as you wanted to if you maintain for the full term of the loan. So always best if you want to build that credit, just do your payments every month on time in full for the full term of that loan.
Crystal, I have another chat that was sent directly to me too. Is
Sure.
there a certain amount of credit streams that you should have open on your account that would benefit you the best?
So that's going to be different for everyone. I have some people who don't manage credit very well, but they want to build. And so they only have one or two accounts and they maintain those very well. And it does good for them. And I have other people who like to have a little bit more variety, but they're able to manage it. So it's all in what you are able to do when it comes to handling your finances. And I can give some different pointers too, if you want to talk privately about some different things you can do to kind of help keep on track, but it will vary. Best note that I can give you is that when it comes to credit cards or loans are used, they're supposed to be there to help build your credit, right? So you have a good credit standing. So typically, you should only use credit cards if you have the money to spend, right? So you use the credit card. Let's say I need gas. And I have cash. I want to put $40 in my gas tank, right? And I have a credit card. I'm going to charge it on my card, and then I'm going to pay my card balance off with that cash that I have. So now I had the cash, I'm paying it off, and I'm building my credit at the same time because I've used the credit and now I'm paying it down. So that's what credit should be used for. When you have the funds to be able to do what you want to do, that's how you build your credit.
Right. We have another question in the chat box. Is using an Amazon secured credit card valid for credit building purposes?
Oh, sure. Any credit card is going to help you build your credit, whether it's secured or unsecured, as long as you're making your payments on time. And if you maintain a 30% or below utilization of that card, then it's going to report positively. And that's another really good reason why you want to check your credit, because if you have credit for something and you're making payments, you want to make sure they're reporting to the credit bureaus to show that you're paying on time and in full. So it's a really good thing to keep track of. But yes, that will help.
Great.
All right. All right. So there are, as I talked about, some handouts that you're going to be receiving. One is basic facts about FICO. It's a little packet and it just tells you what FICO is, and that's your credit score, right? And the really cool thing is it has that little percentage chart that's going to show the 35% of payment history, the 30% of your balances, and so on. So it gives you that little reminder of what affects your score. There's a credit review checklist that kind of goes over everything we talked about when it comes to credit. A net monthly income worksheet that's going to help you track your income so you understand where you are. A monthly expense worksheet, which is really great. It helps you get on track when it comes to a budget. A lot of people just make their payments every month and leave it at that. But if you have a worksheet that you can work off of, and you want to build credit or savings or really readjust your budget, it's good to use a worksheet like this. So all of these, in addition to a copy of today's presentation, will be available to you. And if you have questions about any of them or just want some insight on them, you can let me know.
Crystal, we have more questions in the chat box. So we have a participant who it sounds like they were injured at work. So they had to go to the doctor. They filed this, obviously the billing statement from the doctor to their insurance, but the insurance did not pay the doctor. Basically, how do you clear that debt?
So you can start with talking with the insurance provider to find out why they didn't pay for it, because some things are not covered by insurance. And so a lot of times, just, it's important to check with your provider before you have a service done. or before you schedule an appointment to make sure that it's going to be covered. So beforehand, try and talk to, anybody can call their insurance company and say, hey, I was going to schedule this appointment. This is what they're going to do. Will this be covered by insurance? And they will tell you yes or no. For something that is already been charged and not covered by insurance, talk to your insurance company, find out why it's not being covered. If there's a legitimate reason as to why it's not being covered, there are some resources that may be available to you, depending on income and different eligibility, that might be able to help you in making those payments. So you can contact me and I can help you with that.
Thanks, Crystal. And I think I should have been a little bit more specific with this case. It does sound a little bit more complicated because it was a situation that happened at their workplace and it wasn't their fault. So they wrote a letter to the HR manager and they never got a response on that. So I think that's why maybe the participants not wanting to pay for this. So how do you navigate insurance, your workplace, and your own protection regarding your credit score and your credit history?
So there should always be with an employer a process and how you have to file injury reports. And so if things were not filed properly, then there's a large chance that you're not going to be covered. So when you work somewhere, it's important to read that handbook and know what their guidelines are, because the employer's not going to come to you and be like, hey, report this so that we can cover you, right? That's your job. And so it's important to know that even if you told the employer or somebody who worked there, if you did not file it the way you were supposed to, there's a large chance that it would not be covered. So depending on when this happened, I would look at your handbook. If you do not have one, HR should have to provide it to you, and find out what their process is for reporting work injuries. And from there, then I can help you determine what you need to do, or if there's anything that you can do about it.
Thanks, Crystal. We have another message in the chat box. What's the difference between a credit card and a loan or store credit? Is it good to only have one?
So those are just different forms of credit. So store credit would be like a store credit card, a regular credit card, like a Visa card that you can use anywhere, or a loan from a bank. So they are just different types of credit that you can get. Just like I can get an auto loan or a home loan. It depends on what you need it for. They're all going to help you, or they can harm you in some of the same ways if you're not paying things on time. They all assess your credit when you're applying for it. So they're all going to look at your payment history, the different debts that you have and things like that. So they all look at that. So it's just important to know, why do you need it? Do you need to have a store credit card, or can you use a regular credit card to pay things down, right? At store credit cards, you can earn different credits and things like that, free cash, so you can spend in their stores. A regular credit card doesn't always give you that, but depending on the type, you can earn points. There's so many different types of credit. So if you want to find out what's right for you, you can contact me and I can help you make those decisions. All right, here is my contact information, you guys. Once again, I am here to help you in any way possible. It's so important to stay on top of your credit, know where you stand. Knowledge is power. So know what your credit scores are, know what's showing on your credit report, and contact me if you need any help. Thank you so much.
Thank you, Crystal. Wonderful information. And also thank you so much for offering your services and your contact information for individuals to follow up and continue to learn more. So that's just wonderful. This is actually a two-part series in terms of learning about financial empowerment. Next week, our session is around budgeting and spending, and Crystal will be leading that session as well. please go ahead and register. We've got the link there on the United Way website where you can register. We do have an incentive as well. A special thanks to our sponsor, CIBM Bank. We have financial empowerment toolkits that we have pulled together that have a lot of great information. Actually, a pick and save gift card, $25 gift card, calculator, notebook, coupon organizers. So up to 25 individuals who attend both sessions will have the opportunity to receive a financial empowerment toolkit. So with that, I also would love to share another resource for you. Really, you know, learning is lifelong, and we're very proud of an online toolkit and resource library that we have on the United Way website as well. Of course, it does have some of the financial management, financial empowerment information that you see, but there's other resources as well around job readiness, building a strong resume, interviewing, even some wellness information as well. So it's a wonderful resource library, and really feel free to jump on. We continue to update it, and we hope you find some of that information useful as well. So at this point, we are wrapping up. So grateful for all of you to take the time and be a part of this conversation this evening. Once again, a thank you to CIBM Bank. Special thanks to our wonderful partner, La Casa de Esperanza.